Okay, so welcome to the last video in the supply and demand concepts. This is continuation patterns. I've just shown you reversal patterns, and now I'm going to show you two continuation patterns, which means trend following. And this is rally base rally and drop base drop. Okay, so what are continuation patterns? Continuation patterns in trading, such as rally base rally, which is RBR, and drop base drop, DBD, are important patterns that indicate that the continuation of an existing trend. Understanding these patterns can help traders to identify potential entry points and continuations of trends in the market. This concept is usually used for breaker structures and will be used in your trading plans at the bottom in the high level trading plans to show you how to tag into trade continuations. These are two of the most powerful concepts in supply and demand, that with the reversal ones, you basically have a trade plan. So the rules of rally-based rally, the structure of it is you have a rally, then a base like a pullback, which continuation sideways, and then from there we will continue the rally. So completely different to the reversal ones. These are continuations, meaning the trend is continuing. That's all you need to look for. An initial upward price movement for the rally, then a period of consolidation for the base, and then a movement upwards again, following the base, continuing the prior trend. Implications. This is a bullish pattern that indicates buying pressure is strong and it's likely to continue. Entry points will be from the opportunities from the base to get into the price from maybe a demand area and try and get into it on a smaller time frame. That'll then help you to get into it before after the consolidation back into the uptrend. Again, you're going to need volume analysis. The way that you understand the volume is that you're only getting maybe one-sided color or maybe big candles that indicate that there's still bullish in the area. So, explanation of this. You can see clearly uptrend, pullback, sideways, and then once it had the inverse hammer, it then went again all the way and made a new high, breaking this at the top up here. Then I'm looking for, if it's me, I'm trading the way I am, a fair value gap. Once it starts to look like it's come out and it's come back in, I'm then looking for a fair value gap here to get into the market to take the new high from previous structure. For you as a supply trader, you then look for the supply to come out. It then comes back and taps in. You then take the trade once it taps in to this area with this candle here. You then ride it up to the upside, and first target would be this high here for taking profit. Basic, easy to understand, and follows maybe a dump into a pump. So all the aspects are all tying in together now. Hopefully everything's going to start coming into it. And if you haven't done the playbook yet, once you finish this supply and demand concepts, check the playbook out and that'll give you a full aspects of what's going on in the markets. So that was rally based rally. This is drop based drop. Complete opposite. Bearish movement means downward price movement. So you're going to get your first one, which is your drop. Then your sideward movement. I know this came out here, but it came back into this range and then range from here and then collapsed again. So it based and then it gave us a drop. So you can see that it had an initial downward price movement. Then it had some consolidation sideways after the drop. And then it had a continued downward movement following the base, which is continuing the prior trend. Trading implications mean it's only a bearish pattern. Do not counter trade any of these that I'm teaching you guys. Please only do what I'm telling you to do. If you do that, you will take out years of failure. Trust me. So this will indicate weakness in the bullish movement, and it'll also show you strength in a bearish movement. Entry points again would be around the base area. I'd look for supply from this area or an order block or a fair value gap for you to tap into and continue to move down to the low. Volume again, similar to the RBR, you got to have high volume, so you can see clearly that that was very high volume. It was like a liquidation event for this token. It then came back up, range for a little bit, and dropped again. It came back up into the range again and completed the move further down. I know that that looks like it's done it twice, but it came back into this area, which then extended the range sideways. So I've just explained all this. We had a liquidation event. It took everyone that was in a long position up here out in one candle, 2, 3 candles. It then came back in and then come back into this area here. Now, the reason why I use this for this line is you can see clearly that it's respecting it both ways. So this would have been the perfect area for you to draw a range box. That would be your base. And from that base, then it comes down, comes back up into this area. And you can see clearly that it rejects again. If you put a trend line, it would clearly show you that that was in a diagonal trend line before breaking out. Okay, so now we know what drop base drop means. 4 patterns that you've got to use now. I'm going to help you to identify these patterns, and the same I did with the reversal patterns. Clear phases. You've got to understand that you've got to have clear phases in the 3 phases. It can't just be a couple of candles. It has to be a movement in the market. It has to be 5, 6, 7 candles. It has to be something that can be identified. Even if you're looking at it on a higher time frame, you're still going to be able to identify 2 or 3 or 4 candles together as this price movement. Support and resistance as well with these two, the same as the other two. You've got supply and demand in them areas that you need to be triggering from, especially if it's in a premium or a discount, depending on which way that you're moving. This will help you to get into these trades better and with more confidence. And you've got to make sure you evaluate these patterns within the overall market trend, meaning do not counter trend, only trade these if they're turning up at the right point for order flow. Now, I said that really slow so that you understood it. Please do not counter trade these moves. These moves are specifically created for you to follow the market. So, rally base rally and drop base drop are valuable patterns for continuations, so you can capitalize on the existing trends. These patterns, when combined with other technical analysis tools, will give you proper risk management and that can help you enhance your ability to make informed trading decisions. However, again, like the rest of the videos, traders should be aware of the potential of false signals and the importance of contextual market analysis, meaning you do it correctly before you make a decision and press the button. So this is supply and demand concepts, continuation patterns, rally base rally, and drop base drop. I'll see you on the liquidity concepts module on the next video.